cents and 61 pence sterling.
Joining us now for a further update on financial matters is Rod North, the Executive Director of Bourse Communications. Rod, good to see you. Thanks so much for coming in, as always. Better and better news coming out of the US. We've had the official declaration that the recession is over. We had that coming out yesterday. And now fears that the double dip recession possibly may not happen.
I think that's probably right, although you've got to look at the situation where there's still close to 10% unemployment in the US too. So I suppose it's a bit of a bitter pill for those people who are unemployed to swallow. But certainly the signs are very good, and the Federal Reserve last night also was reported that housing starts were up 10% for August. So a lot of the indicators are pretty positive there, but I think it's still a wait-and-see game. Interest rates are largely muted at zero. So until we see any action there, of course, the effects for our position in terms of our dollar, we'll continue to see our dollar probably staying very high, if not rising, if not getting to parity.
We've had very strong leads over the last 24 hours that our central bank is seriously considering raising interest rates much earlier than the markets had been thinking even only 2 or 3 weeks ago.
Yes, there's a lot of nervousness around about that, and it was interesting listening to Solomon Lew last night, Chairman of Premier Investments, on Late Line Business, talk about this, because of course one of the big issues will be how those rate increases, if they come before the end of the year, will affect both consumers and of course retailers. And I think what we're seeing at the moment is still that two-speed economy. I mean, we're seeing the resource and mining sector boom, and of course, you've got the business and consumers that are still, not quite back on their feet from the global financial crisis. There's lots of pressure on particularly business to repay debt. The tax office, for example, is owed something like $12 billion, and I think a lot of businesses have been trying to manage that process over the last couple of years, but there's been a bit of talk that the heat's been turned up by the ATO on businesses to repay that $12 billion of debt, because of course the government is looking for that money to come back in to help fund the economy. So rates, if they do go up, there's a fair bit of concern about that happening between now and the end of the year, because we don't want to see the Christmas position suffer as it did last year, because the retailers of course have probably been one of the worst hit sectors in the economy over the last couple of years.
It's a very difficult one though, Rod, because there is a genuine two-speed economy. You've got businesses booming, money slushing around in the mining sector, and then other parts of the economy really doing it tough. How does a government or a Federal Reserve set policy for this kind of...
Well, this is where it's very difficult, and Glenn Stevens in his meeting on Monday, and effectively what he really did when you looked at the Reserve Bank minutes yesterday, he really did basically just cover what was in the minutes itself. But I think we've got a situation where the Reserve Bank governor has to look very carefully at that two-speed economy, but of course there's only one step that they can take, which is using monetary policy, and that's got to affect and be able to help both sectors of the economy.
And inflation's going to be a key issue?
Well, inflation really has to be the measure, and I think it's probably likely that the Reserve Bank will wait to see what that inflation figure will show in October, late October when it comes out. I think that's probably going to be the wiser thing to do.
Rod North, thank you so much as always.
Thank you.
Rod North from Bourse.
Now, coming